Welcome, I'm Sharon Kreider. I'm a CPA and an enrolled agent in Sunnyvale, California. I teach tax update classes for tax professionals. This is an update on the Affordable Care Act and its provisions for the 3.8% Medicare tax. The new Medicare tax beginning in 2013 raises $210 billion of the very expensive price tag of Affordable Care Act. So we need to see how that's going to apply to us and to our clients in the very near future. Vern Hoven and I recently presented a webcast for paychecks. We had 2,500 viewers, and those 2,500 viewers came up with lots and lots of questions. So let me give you the top 3 questions from our paychecks webcast. What is net investment income? So for purposes of the new tax, net investment income is interest, dividends, annuities. It's passive income, including all rental income, which by definition is passive income. And it is the gains from the sale of those kinds of assets. So if I sell my apartment building, that would be gains from net investment income from the sale of a passive activity, and I would pay the 3.8% if my adjusted gross income exceeds $200,000 single and $250,000 married filing joint. When I sell, number 2 question, when I sell my personal residence, do I pay Medicare tax on the sale? You and I know there's a viral email going around saying that Obamacare, the Affordable Care Act, imposed a new 3.8% sales tax, excise tax, on the sale of your personal residence. That's not the case, especially if you read the email where it says, I sell my house for $100,000, I'd have to pay $3,800 of extra tax because of Obamacare. There is Medicare tax on net investment income, including capital gains, but only to the extent the capital gains are taxed. So if I sold my personal residence for $100,000, the exclusion under Section 121 of $250,000 makes the taxable amount 0. So only the amounts that go forward as taxable will be subject to the 3.8%. and only if my AGI, and to the extent my AGI, is over the $200,000 or the $250,000 mark. If I sell my house for $1 million gain and I'm single, $250,000 is excludable, $750,000 of that gain could be subject to the 3.8%. And finally, our most popular question was on S Corporation K1 income. Is S Corporation K1 income subject to the 3.8% Medicare tax in 2013? Well, let's start with any wages I pay to myself, I pay Medicare tax on. So obviously wages are covered in the Medicare tax and the increase to the Medicare tax for wages. But this is about line 1, ordinary income from my S Corporation. Business income is excluded from net investment income. So if I am active, and that's the word used in the bill, if I'm active in the S Corporation, I'm the one working in the S Corporation, then my line 1 ordinary income is not subject to the 3.8%. Whether it's distributed or not distributed, it wouldn't be subject to the 3.8%. But if this is a passive activity, the income from the S Corporation, where I don't work in the S Corporation, where you're the one working in it, that income will be subject to the 3.8%, as is all other passive income. So those are the 3 popular questions from our Paychecks webcast. I'm Sharon Kreider, and I'll see you at a fall update.